Live from somewhere in Charlotte, North Carolina. This is John McEntyre Show live. I'm John McEntyre. No, people wasn't expecting that. But I hope everyone had a good weekend. Um, I know I did. Today is Monday, July 29th. Only a few more days left in the month. And you know the routine. Before we get the show started, gonna do some wallet wins. But even before I get into the wallet wins, just want to give a quick reminder. I'll say it now and then at the end of the show. It's July 29th. Um, Basically, this month, whatever you've done has been done. You know, if you didn't accomplish something, then that's okay. If you did, that's great. So now is the time to think about next month. It's time to think about, get ready to do the budgeting and all of that. I'll talk about that maybe tomorrow or Wednesday. But just to put it on the radar, today is Monday. You gotta, most of us have a hectic week. This is the summer, so it's just something to think about. And so now let's get into the wallet wins. Oh, one more thing. I written it down on the notes here. Every time I turn on whatever it's the news, any lifestyle shows, whatever, they're always reporting, no matter what age group they're talking to or talking about. One of the main concerns for people is saving money. Younger people, they know they're not saving enough, and our older generation of baby boomers, that group is concerned about running out of money, and one of their biggest regrets is, I wished I had to save more money. I didn't know it was going to be this expensive to get old. There's a lot of issues with getting old, and so um, just make sure, stay conscious on saving. Really stay conscious on it. Put it on an automatic plan, where it's just deducted from your pay. Just make it automatic to where it happens, because it seems like every day more and more people are becoming more and more concerned about not having enough money saved. And slightest emergency or health issue or something, and it's basically wiping hardworking people out. And so that's just my quick 2 cents on that, because I saw like four different segments about it this morning, not counting over the weekend. So many people being concerned, and I really don't watch a lot of what you call financial news. I don't watch a lot of news anyway. Most news I watch is the weather channel. I just like weather. It's just my thing. But I do watch news in the morning and some in the evening, just to see what's going on in the area. But everyone's running segments about saving money. And so we're going to do our part on it. If you have any questions about saving money, um, put them in the comment there. Put the Q, and we'll answer the question the best of our abilities on, saving more. And if you have any wallet wins you want to share, any comments you want to share, uh, wallet wins, put hashtag wallet wins in the comment section there, and we'll address it as we move forward in the show. So let's get into it. Wallet win number one. Uh, I helped my mom get a different prescription drug plan that actually pays for her medication. And yes, that is a serious wallet win. Talking about money, with the older generation, a lot of their money is going into medication. Healthcare and their medicines. That's usually one of the largest expenses, and medicines are. I mean, I'm like, it never ceases to amaze me at how expensive some of these medications can be. And I'm like, wow. So you're going to the doctor, and you're having to take care of that, and then these medications. So you have to do everything possible. And I mean, it doesn't matter. I've talked to wealthy people that complain about the cost of medication. It doesn't matter. It's not a socioeconomic thing. They're just serious about it. It was like, look, this something has to be done. Medicine costs, prescription drug costs are going up every year. And it's not showing any signs, and they're changing formularies and how you pay for. We paid for this. A drug plan paid for this last year. This year they're not going to pay, or they're only going to pay half So you have to stay on top of those types of things, you know. And in this particular situation, there's a son or a daughter that's working really close with their parents to make sure that they're not overpaying for anything. So I celebrate that one. Second one, wallet win number two, just made my last car payment. I'm gonna drive the wheels off this car. That's funny. I heard that. Uh, just made the last car payment. That is a good feeling. That's one of the. I remember I said it one day, and this guy, I said it like a few years ago, and the guy still laughs about it at the gym. He was like, what do you like? That's like your third. That's like your third or fourth of that type of car. What do you like so much about that car? I said, it's paid for. That's what's so likable about it. It's paid for. A paid off car, I don't care how raggedy it is when you're making payments on it. When you pay for it, when it's paid off, it just drives better. I don't know. It just drives better to me. Um, yeah, paid for car, they're much more reliable also. And isn't that weird? Something you're making a payment on, it tears up all the time. As soon as it's paid for, it's like it never gives any more problems. I mean, somebody put that in the comment. Maybe is it me or I don't know. But wallet win number three, I bought a rental policy. Basically, they're renting is what it's saying. They're renting where they live, and I didn't realize I had so much valuable stuff. Yep, that's a definitely a wake up call for people. I mean, we're in the Charlotte market. What average rent $1,500, right around 1,500, and that's not for a lot. Um, so if you're paying $1,500 for where you're staying in rent, that means you're making like decent money. So you're gonna have the televisions, the computers, all of the technologies, real nice furniture, and all of this. So you have to think, okay, what if something happens, a fire, a flood, or whatever happens, especially with an apartment, uh, the neighbors, something happens with the neighbors. Yes, the complexes, they do have umbrella policies and everything like that, but they don't insure personal property. They don't insure, and if you did get something out of it, I mean, by the time you got it, life has passed by. So it's not like something they're going to come in and write a check for tomorrow. Especially in these big complexes, they have to do all of these investigations. So you're the last one on the list they're going to take care of, because it's the owners that's paying the actual policies, paying for the policies. So they're first in line. But even before that, all of the inspections and insurance companies want to make sure they're going to try their best not to make a claim payment, to actually pay the claim. Um, Not because they're being stingy, they just want to make sure that everything is on the up and up, because it happens all the time. And so you want to have something to protect your personal property. Uh, when I was in active sales in real estate, I would walk into people's apartments. They're getting ready to buy, first time home buyers, and I'm like, wow, you have a couple of those big screen plasma televisions on the wall, and a computer in every room, and clothing, all of your clothes, all of that stuff. Um, it adds up. I mean, it could easily be, I mean, I've seen them. I've seen sometimes those, 15, 20, 25, $30,000 worth of stuff. Yeah. So all of that get wiped out. You couldn't go and replace all of that at once, especially when you're younger, to come out of your pocket with $30,000, for instance. So that is a very smart move. That's a big time wallet win, because that's what most people, they don't think about it. Insurance is just in case. As you moving through life, something happens, and the probabilities are high that it will happen, as we'll talk about in the particular topic that I'm covering today. Most of the time, it's going to happen. So you just have to be prepared for it. Real insurance, you don't know what your neighbors are doing. Maybe they forgot to do something, turn the oven off, turn the stove off. stop the water from running in the tub or whatever, pipe burst, something happens, and you're in the middle of it. It wasn't your fault. So that was a good wallet win. All right. Today's topic is not a question. It was actually this comes from working with a client, and so we thought this would be good to have on the show today. Basically, client was about to leave her job to have her baby, and she had decided that she would to really start a family. This was her first baby, but she was planning to start a family, and she had just made the decision she was just going to stay home for a few years. Well, as we was looking at everything, um, the topic of disability insurance came up uh, because disability, it insures income. It doesn't insure work, it insures income. I go a little bit deeper than that in a second. uh, but we were like, okay, doing your leave of absence, or your hiatus, or whatever you want to call it, if something happens to you, you're going to be a homemaker now. Something happens to you, who would step in to do everything that you're doing? And would they have to be paid? That's the question. Also, is your income, is it dependent upon operating the home? So you have two things to really think about. There, two big things to think about. Those are huge to think about. So she hadn't really looked at it that way. She was just, in her mind, she was like, I'm just going to do, have my short-term maternity leave. That would take care of 3 to 4 months maximum. Depends on the company, the policy that they have, the state that you're in, things like that. So it was just okay. I would just, use. She basically made up her mind she was just going to use savings. She had budgeted her savings, and she wouldn't have to use that until her maternity leave was over, and she just wasn't going to return because the particular company she was working with, she was able to be that transparent, and they were backing it and everything. Um, but we don't know, we didn't go into the full disclosures of everything. Well, we said, okay, you're going to have to do, your own disability. It's always good to have your own disability anyway, because your disability, um, if it's paid by the employer, it ends when you leave. That's basically it. It's not yours. There is it's a benefit to you, in case something happens and you cannot work. You can no longer work for the company. But that has a beginning and an end, and it's not a long term either. It's a very short term type thing. So we just basically advise her. She's doing it, buying a non-cancelable DI policy, disability insurance policy, which means it's her personal policy. It goes with her. So if she did, while she's on hiatus or no longer working, something happens, uh, it will pay. So that means she would have the money, if need be, to pay for someone to come in and help or whatever. And there you go. She's covered. Another big benefit is, especially with the group benefit policies, the the employer is paying it. So they're paying it. That means you're not paying any taxes on the policy. You're going to pay taxes on the benefit. So you really, the policy, for instance, may say, if you become disabled, you will, it will pay 60%. Let's just say 60%. Well, we know 60% is not the rule. That's not the true, because you're going to pay about 20% in taxes. So you're going to receive about 40%. Well, that's a problem. Your pay goes from 100% down to 40. You do the math. Your pay gets cut. anyone out there watching, your pay is cut 20%. I mean, 60%. You lose 60% of your pay. That's a big cut. So now with your own policy, normally you're buying that with after tax money. So that means all your benefits won't be taxed. You won't have to pay taxes on the benefit. That's also one of the biggest benefits of having your own disability policy is always when you look at everything financial, you have to bring taxes into the picture because that's usually one of the largest areas. Most people are concerned, and it's a valid concern about inflation. What is inflation going to do? Okay, taxes is right there with inflation. As a matter of fact, it could be even more dangerous. Sometimes uh, I remember my first time receiving a paycheck, and I'm like, and who is this? It's a joke a lot. Who is this FICA person? I mean, FICA. Who is FICA, and who is this? I mean, these people haven't put in on this. They didn't come and help me work. They didn't do any job. Now, why are they getting so much of my money? I mean, they get paid more than me. It hadn't done anything. I'm on the wrong side of the table here, But that's just something to think about. And like I say, in her particular situation, she has a policy in place that will go with her. Even if she decides not to go back to that company, fine, she still has a policy. Whatever she decides to do, she has a policy. Now, there's another group out there that to think about this also. That's the future entrepreneurs. If you're working somewhere and you're planning to start your own business and maybe leave your job or phase out your job, do the disability income while you're working, because if you try to do it afterwards, you're going to have to wait at least 2 years because you have to show income. Because like I said, that's what the policy does. It insures income. So if you haven't made any money yet, there's nothing to insure. The company's going to say, call us back in a couple of years. We want to see proof of income. And there's some of the horror stories, not horror stories, but some of the stories I've seen that didn't turn out so well with people that started their business. Something happened because in America, 1 in 4 people will become disabled during their work career. 1 in 4. So basically 25% of the workforce is going to end up disabled one way or another. And most people think disability happens from injuries, and injuries is like the least of the causes of disability. Number one is musculoskeletal diseases, and the top one in that, carpal tunnel syndrome, from repetitive work, using, doing the hands. That's usually what a lot coming from manufacturing, having worked in manufacturing plants. I know when I see someone up in age, it's older, and I see scars, I know you worked in a plant at one time and you had carpal tunnel syndrome. He was like, wow, how can you know that? It happens. It's in manufacturing companies all the time because of the repetitive nature. Or package handlers, people that work for FedEx, UPS, those type of people, they end up with it as they age. Delivery type people that lifts a lot, that's where it normally happens. That's where most of like 30% of disability, that's where it comes from. It comes in that area there. Cancer is number 2. Then mental issues, and then injury. Mental issues and injuries are running neck and neck. But cancer and musculoskeletal disorders are the top 2 reasons for disability. And we know how rampant cancer is. So that's why you would want to have a disability policy in place before you left work. If you're an entrepreneur, if you're planning to take a long time off from work or whatever, that's why you would want to have it, because it's a very high chance your chances of becoming disabled during your work career is higher than your actual home burning down. And that's why when it's compared, a lot of times premiums on disability insurance may be a little bit higher than homeowners insurance, is because it's just the chances are much higher of becoming disabled, and that's why it can be expensive. But my question is, what is more expensive, paying a monthly premium for insurance, or trying to figure out how you're going to handle life if you became disabled and you didn't have any income in place. That's expensive. Now that's expensive. You know, uh, paying $300 to $400 a month for a disability policy, in my book, would be better than trying to figure out how am I going to come up with $3,000 to $4,000 a month every month while I'm disabled. You know, so that's how to look at it. That's just the way. That's how we got the client to look at it. She was fine with it. She hadn't thought about it. She didn't know, and now she was like, "Oh, perfect. Now I know." I mean, while I'm, yeah, you're growing a family, so you need your income, right? Yeah. If something happens, you will need them to be taken care of. So that's where we are with. I just want to share that one. I thought that would be a good one to share today. Um, but before I leave, the question of the day is: do you have a plan in place in case you became disabled from work and was unable to work? That's the question of the day. What is your plan if you became disabled? What would you do? A lot of people, we see out there a lot of mm, fundraisers and things, that would be very unnecessary had the person just been properly insured. And that's very stressful to trying to put together fundraisers to pay the bills, month in and month out, things like that. So that's the question of the day. If you have any questions, have any comments, or you want to share Wallet Wins, um, we do 1 hour free consultation. Contact us. We'll look at the entire financial picture. We're doing financial checkups constantly with people. So contact us. And we'll look at your financial situation. So I hope you enjoyed the show. Like it, share it, spread the love, and we'll see you tomorrow, same time, same channels.